You're watching Stockwatch. I'm Simon Brown, and joining me to unpack your stock-related questions today, Andrew Padoa from Sasfin Wealth, Zwelakhe Mnguni from Benguela Global Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, SMS 41392, or on X at Business Day TV using hashtag Stockwatch. Gents, appreciate the time today. Zwelakhe, let's start with you. Let's start with that Telkom update. Parts of it actually looked really good. The market's certainly liking it. I suppose the question is, in your sense, is there value in Telkom? Certainly, there's a lot of folks who are not such big fans of, frankly, telcos generally. Telkom?
Yeah, I thought the numbers, as you say, they were quite decent, but I think it's always been a stock that's been cheap for a very long time. I think they are trying to execute a turnaround, a transition from being the fixed line led to mobile led. I think that has worked out relatively well so far, but they've got a lot to prove, to be quite honest. I mean, the group revenue was only up 1%, but mobile was up strongly.
Yeah, that was it. I mean, the first line group revenue up 1%. I'm like, this is not good. It got better as I went. Andrew, I mean, telcos generally have the problem that they are, I mean, essentially they're utilities. I know they're all trying fintech, and I know that data is exciting, but I mean, do telcos excite you at all, Andrew?
Simon, no, they don't. The revenue growth that we saw there from Telkom, 0.9%. It's difficult to get excited about that, but they are pursuing that data-led strategy, and it looks like, if you focus on that part of the results, that looked pretty strong. Voice is a commodity, so they've got to focus on something else. Turnarounds are hard though. Look at some really amazing American companies. Look at the likes of Nike. Look at Starbucks. Those are really well-established businesses that have been around for decades. And both their CEOs got fired last year for they weren't able to effectively get the turnaround going. So turnarounds are hard. Let's see what happens with Telkom. Maybe it's a short-term trade, but it's not one that I'm investing in.
Yeah, hey, I would see your Starbucks and Nike and raise you Intel, but we won't go there just at this moment of time. Zwelakhe, Sasol. We always get Sasol. It was really under pressure. It's recovered a little bit today, but it was down at 73 and change. Are you loving Sasol? Is there a price at which you buy Sasol, or do you need something fundamentally to change within the business first?
Well, look, you're putting me in a difficult position. I definitely think that it does look attractive at the current levels. The only concern that I have is that operationally, I mean, it's probably there's a lot of concerns. I think their volumes are coming down, or at least what they guided did seem like the volumes are coming down, and also they seem to be struggling to get that Secunda business to be back on their books. I mean, they wrote it off completely, and it's a challenging business. So there's some serious challenges that the business faces, but if they could execute well, I mean, they've got debt as well, but if they could execute well, I think it would probably be a short-term buying point here.
Andrew, when I have your colleague on at times, David Shapiro, I ask him about Sasol, he rolls on the ground and laughs at me. And now you're laughing at me. Sasol, are you seeing anything here from Sasol?
I'm just kind of watching at the moment. So we had the trading statement out last week. They'll have their interim financials for 2025 will come out later this month.
Yeah.
I think that'll be quite telling to see. The results that trading statement wasn't great, but the shares didn't really react because expectations in Sasol are already, rock bottom. So I think I'll take a wait and see what happens in those financials later this month.
Yeah, I'm with you. I'm sitting on the sideline. I got all my fingers. I like them right where they are. Let's go offshore. Andrew, let's stay with you. Sorry, offshore rather. DocuSign. I don't know if it's a stock that you follow much. It was one of the pandemic darlings. If you look at that share price, along with Zoom and many others, it's come under pressure. Looking a little bit better at this time. The question I got on Twitter, I think sometime last week, was surely opportunity in DocuSign as we move to a much more digital world, and they sit in the heart of that.
So Simon, it's not a stock I follow closely, so I can't comment specifically on DocuSign, but I would agree with that person saying that we're moving to more tech AI world, but they're not the only play. I quite like the big tech players that have massive capex to stay ahead in this AI race. You need a lot of funds to stay ahead in this AI race, and there's only a certain amount of companies that can do that. If the three of us had to start a company tomorrow and try and take on the Microsofts and the Googles, I think we'd really struggle. These NVIDIA chips, they cost thousands of dollars. So I think the big are going to get bigger. So I wouldn't be going for a DocuSign. I think, the big tech in the States are actually looking quite interesting.
Yeah, I take your point. And I mean, I ran the numbers in the weekend. Amazon, Alphabet, Microsoft, Meta, CapEx spend this year, 300 billion. That could probably buy
100%.
DocuSign.
Yes.
Zwelakhe, do you DocuSign one on your list?
Yeah, look, it pops up often on our screeners. I mean, it doesn't have much of a big growth ahead of it, or at least what we've seen more recently. Nonetheless, I mean, I think the good business, the defensive business, that potentially could be a takeout target. I mean, if you look at the area where they play, where they create electronic signatures and contract agreements and secure those type of things. Somebody could take that kind of business and basically slot it into their business and basically make it part of their offering. Potentially the likes of Salesforce and others could consider it. But I think it's not that expensive compared to the other tech stocks. I think it's trading at about 18 times.
Yeah. And as you were saying, potential takeover makes sense. And Salesforce there was one that came to mind. I thought Adobe, but of course they've got their own. So Salesforce, perhaps a better fix. So Zwelakhe, staying with you, WeBuyCars question coming in. I got this at the listing last year, done very well. Gone sideways the last little bit. Still some value in WeBuyCars. What's your sense? I mean, we're seeing a slightly better consumer. We're seeing vehicle sales pick up, but neither of them are storming ahead, I suppose.
It's probably still there, potential, the growth potential is still there, but there is growing competition. The second thing that one needs to keep an eye on is their cost management. I mean, they've been, if you look at the vehicle sold per agent or whatever, the people that buy cars for them, I think that has been falling. And I think it's a concern because they seem to have been building up a lot of inventories, and that could be something that that could maybe stall them. It might force them to take lower price points in terms of the GP margin could come under pressure in that sense. But if you look from where they started to where they are now, the GP margins have come down probably from around 7.5 to around 5, 6 at the moment.
Andrew, I mean, certainly whenever I chat with CEOs in the vehicle space, they tell me there's a lot more second-hand vehicle activity going. The consumer is better, but not well, I suppose, is the prognosis. Would you look at a second-hand car dealer at this point?
Well, I think WeBuyCars is an exceptional business. They, from my perspective, and I've dealt with them as a client, so I can kind of talk from that side of the fence. I find they kind of run circles around their competition. It's an issue if the competition is coming and getting stronger and gross margins are coming down, like Zwelakhe mentioned. But they're a phenomenal business.
I take your point. It is one thing. They're taking a disparate, what was never good experience, and kind of trying to unify it and create an experience. And let's stay with you a moment. Let's stay with South African consumers at a moment. Do any of the clothing retailers pique your interest at this point? We had a massive run last year. One point, Mr. Price was up nearly 100%, Fashini Group 50%. Then we saw the updates very weak from some, such as Truworths. Andrew, any clothing retailers on the JSE?
On the clothing retailer side, I think the answer would be no for me. It's more on the food side. I think Boxer and ShopRite probably gets my attention the most of the retailing space. The clothing retailers, like you said, have had a big run. With Mr. Price almost doubling in the last 12 months, we've had quite a bit of multiple expansion. So, I think at ShopRite, kind of at these levels of around 280-ish is looking pretty interesting. So yeah, I'm on the food side, not on the retailers at the moment.
Zwelakhe, would you be looking at a clothing retailer at this point?
No, I'd agree with Andrew. I think they've had a good run, and delivery has been underwhelming. So the market has been punishing them to some extent.
Yeah, no, absolutely. I mean, I think Mr. Price touched 300 towards the end of last year. But then let's stay with food retailers. Question was coming through around Pick and Pay. Zwelakhe, Pick and Pay, would you prefer one of the other foods? I've got to say, I'm with Andrew. I'm quite liking ShopRite at the 280s.
I'd go with Boxer and ShopRite rather than Pick and Pay.
Okay. And Andrew, you're not going to, I mean, Pick and Pay, you're a ShopRite Boxer chap.
Yeah, so going back to my turnarounds are hard story. Turnarounds are very hard. If Pick and Pay can just, I don't see them taking back the market share that they've lost. I think they've lost it, and I think it's going to be very difficult for them to take on the likes of ShopRite. So I live in, I'm in Durban, and I just see these 60 bikes everywhere.
Yeah.
It's kind of like mosquitoes in a Durban summer in Feb. You just can't escape them. So I think it's going to be hard for Pick and Pay to take back market share that they've lost. So I'm sticking with ShopRite.
Yeah, I like that point. It's not as simple as saying, let's get back that market share. You've actually got to get it back. You've got to go back into the trenches and win it. And I wouldn't like to be one going against ShopRite in that regard. Question came through, S&P 500. Is that still, Zwelakhe, looking at the ETF, would you still be looking at a broad-based S&P 500 ETF, or would you look at it and your eyes water a bit because of valuations, notwithstanding your stock picks coming up later in the show?
Yeah, look, I think if I want offshore exposure, I'd definitely take the S&P, and primarily because I think the US has got probably the strongest economic momentum at the moment. And if I look at other regions, there's lots of problems. Europe is facing challenges. China is still having to work out its way. So if I think about the earnings growth momentum, and the valuations are stretched, but I think these companies have been delivering largely. A lot of them have been delivering ahead of expectations. So I'd probably say, because it's a broad-based basket, I'd take that rather than go anywhere else.
Andrew, I mean, certainly evaluations are stretched, but to Zwelakhe's point, we're in earnings season. Earnings haven't been bad. Yeah. I mean, to be clear.
Yeah, completely agree. And I agree with Zwelakhe. I would also be happy with some S&P 500 exposure. Like you said, China's in trouble. Europe is not growing. I just don't think investors should kind of have massive expectations. I don't think you'll get the returns you got last year or the year before going forward. I think returns will be a bit lower with a lot more volatility.
Yeah, look, I mean, we got low to high 20s last year and the year before. Gentlemen, let's touch on JSE, the actual stock, not the exchange, the share, as CEO'd by Dr. Leila Fourie. Zwelakhe, I have to be honest, I hadn't looked at this in some time. It certainly was a stock that was doing great at a point, and at this point the computer won't show me what it looks like. The question is, it pays a good dividend, we've seen some activity, stock hasn't done much. Would it be on your shopping list there? I mean, it's kind of flat in 3 years, and then dividend on top.
It may be flat in another 3 years. I cannot see what's going to be a catalyst for the JSE to perform strongly. I think we remain under pressure from a volume point of view. There's been delistings on the stock exchange, and sadly, the ability of investors to access offshore market has taken some wind out of their sails as well. So there's lots of options for investors outside South Africa. So I would be cautious about JSE. I think it pays a good dividend, but it's an uphill battle.
No, I take your point, Andrew. I mean, certainly Zwelakhe makes a great point. 20 years ago, investing offshore was nigh and impossible. 10 years ago, it was difficult. Today, it's click on my fancy phone. And that direct competition. Your thoughts on JSE as an investment?
I completely agree with my colleague. It's a struggle to see what the catalyst is going to be to see meaningful sales growth for the JSE. Delistings are happening. I think we probably lost about half of our listings on the JSE in the last 15 years. Yeah. It's expensive for smaller companies to be listed. It just doesn't make sense. So, yeah, it's a tricky one. I'd rather be on the sidelines as opposed to investing in the stock.
So then a completely different question, but let's then come to you, Andrew. Let's stay with you a second. What about gold more broadly? And then particularly a question around Pan-African. I mean, I have to be honest, I'd never owned gold or a gold mine until about 2022. It feels weird. but I'm making money, so I'm not going to argue from it.
Yeah.
Are you putting gold in your portfolio? Have you got a preferred gold miner?
So I'm not a fan of the gold miners per se. I'd rather hold the physical. So I'd rather hold GLD as a percentage of a client's portfolio. If they're looking for something that's kind of, widely diversified, I think gold's got a place. It's a hedge. And then you can just eliminate company risks
Yeah.
or if something goes wrong. So that's kind of how I would play the gold exposure.
Yeah, the gold miners are a little more tricky. So, Zwelakhe, are you a gold bull? Have you got some gold minings for us?
I do believe in gold, but I think the gold miners in SA, many of them are lower quality. I think if you look at the harmonies of this world, they've shot their lights out, primarily because they are high cost producers, so a high gold price would support them. But I think it is something that if you cannot own the physical gold in your portfolios, you can hold in your portfolio to just ensure that you protect the portfolio against the volatility of financial assets.
Let's stay with you a second then. What about some offshore gold miners? I mean, are they more attractive out there? Certainly some maybe slightly down the cost scale, but are there offshore gold miners you are liking?
Yeah, look, we've held the likes of Newmont, which was bought out by Newcrest, which was bought out by Newmont. So we hold Newmont, we hold some smaller gold companies in Papua New Guinea, but I think the big focus for us is the unit cost of production. I mean, the companies that produce at a low cost are safer because gold is volatile, and if the price of gold pulls back, you know that you don't have to panic or rush for the door. So we hold more high quality kind of businesses.
Yeah, no, I take your point. And of course, the gold miners are subject to inflation. It might be lower, but there's always that inflation risk. So, Zwelakhe, let's stay with you. Let's go to British American Tobacco. And this used to be a mainstay. We've seen the Rupert family exiting it after, I think they started it back in the 30s or the 40s or something. Decent dividend yield, sterling dividend yield, stock price boring. So, Zwelakhe, would this be a stock in your portfolio, BTI?
Probably not a big allocation. I like a small allocation. So if I could say underweight, I think the big challenge with the BTI, that makes me uncomfortable is the level of debt. They have to keep executing on the pricing side, but also the new generation products. Those are the two levers that they have. I think without those two, I think it would be challenging, but they are doing well so far. So I'd probably say that it does have a place as a rand hedge, but not a big fan of the stock.
Yeah, Andrew, your take on it? It was, once upon a time it was a great business, but smoking's been in the back foot for, 40 years or so. Is it a stock you would add to a portfolio?
I think if there's clients that are looking for income, tax-efficient income, it's one I would consider at a small weighting. But I would, my first place for that kind of tax-efficient income would be South African banks. They've got great dividend yields as well, not just British American Tobacco. And then on the offshore side, you've got Philip Morris as an alternative. So I think it just depends on the client and what they're trying to achieve.
I like your point around the South African banks. In many cases, sure, they might be ZAR yields, but they're better yields. What would be your preferred bank, or would it just be a basket of the big banks?
So FirstRand at Standard Bank would probably be my picks. Their forward dividends are in the single digits. Their forward yields, single digits. The dividend yields are, close to 6%. It should be, you never know what's going to happen with Trump, but double-digit returns from the banks for the next 12 months. I would expect double-digit returns for the next 12 months for Standard Bank and FirstRand.
Zwelakhe, local banks, do you have a preferred in this space?
Yeah, FirstRand, Capitec, and Standard Bank are the main ones that we hold. I think I agree with Andrew that they are businesses that are high yielding, and hopefully if we get momentum going with all these infrastructure projects that are coming up. They'll participate, and that will then enable them to lift up their growth. So, yeah, I'd be in favor of banks. I mean, they look cheap as well.
You mentioned Capitec, you mentioned cheap. Those two words don't go together. But then that Capitec trading update of 10 days ago was a strong update. What was it? 28 to 32% higher HEPS. I mean, it might not be a cheap stock, but they are, with respect to Capitec, knocking the lights out.
I think we're getting caught in the PE multiples and the price to books that are elevated. It's true, they are, but if you look at the returns and the consistency with which they generate those returns, I think they've been very good. And if they do get apply the same model on the business banking as they did on the retail side, I think they could do phenomenal numbers in the future. So I'm optimistic about Capitec.
Yeah, look, and management has proved it year in, year out for, 23 years or so since they listed. Fortress REIT fund, question done well since the removal of the two-share scheme. There were A's and B's. Do I carry on holding? Zwelakhe, last year was a year of many weird things. One of them was property having an absolute stormer. Would you continue to hold Fortress in this market?
I would. I think their portfolio is not bad. I mean, they've got probably 2/3 in the logistics and 1/3 in the retail space. So if I just look at that kind of portfolio, I think it's not a bad positioning operationally. But I mean, as you said, I mean they've had quite a strong run, and one would want to look for opportunities where you can buy into the dips. But it's a solid business.
Yeah, okay. It was under $8 this time last year, and now it's $19. Andrew, would you be looking at Fortress? I mean, there's more to those numbers than it seems, because of course they got rid of the A shares. I mean, all that complexity. But would Fortress be in a portfolio for you?
So I wouldn't be panic selling it if I hold it.
Yeah.
But for new money, I'm not sure I'd be getting in Fortress. I think the stocks in the property space that gets my attention would be Vukile. And then some of the offshore players, so Nepi, Rockcastle, and Sirius Real Estate.
Okay, Vukile, Sirius, Nepi, but I take your point. If you're holding, there's no need to panic. Certainly the chart is looking just fine. Let's go to stock picks. We've got a couple of minutes. So, like, are you going with Microsoft? I got to say, the big tech valuations are big. Then the results come out, and they were big too. And I mean, the capex spend, which I mentioned before the break, I mean, 300 billion from 4 stocks. Microsoft is your pick today.
Yeah, certainly. I think it's a pick because it's not a seasonal tech. You know, it's a tech that is very defensive, and I think with the advances in AI, I think they will be able to add more features into their offerings and be able to essentially extract more value out of their customers. I mean, the Copilot product is not yet even halfway in terms of being utilized. So I think that their cloud and AI product would be a big driver going forward.
I take your point, and quickly on the cloud. I mean, there is Azure. It doesn't even have to be their cloud. It might not be Copilot. It could be the three of us starting our AI company. If AI is winning, it doesn't matter whether you're DeepSeek or OpenAI or Microsoft. If you're going to be on their cloud, they're going to score from you anywhere. And that's kind of the beauty of it. They're almost like the other end from NVIDIA in terms of being the shovel.
Yeah, I think the one thing about AI is that the productivity gains haven't been factored into most of the market players. So there is going to be, as this AI advances, do these companies need so many people, so many developers? I mean, you could speak to AI and ask for a code and get the code created for you and basically paste it into your application and develop it. So there is a risk that in the long run, we will see these companies retrenching and therefore improving their margins as a result of AI utilization, not just selling it out to customers.
Yeah, 100%. Andrew, Alphabet, again, knock it out the park. I'm quickly trying to count. They've got 1, 2, 3, 4, 5, 6, 2 billion user businesses sitting in Alphabet. That's your stock pick today. It's a giant of a business.
Absolutely. So just going back to the S&P 500, I don't think the S&P 500 as a whole is screaming cheap. It's kind of, trying to find the tallest dwarf or the shortest giant, however you want to see it, the least inexpensive company. So, Alphabet's on a forward PE of 20, which I don't think is excessive for a company of their quality. A lot of cash on the balance sheets, and you just mentioned, all the businesses within Alphabet. YouTube revenue is around $55 billion a year. That's more than Netflix alone, just that. So, I think what's going on in AI is exciting. These guys are really smart. They wouldn't be spending this CapEx if they didn't think the risk-adjusted return would be worth it. So that's why Alphabet is my stock pick tonight.
100%. That's it for Stockwatch today. Thanks to our guests, Andrew Padoa from Sasfin Wealth with Alphabet, Zwelakhe Mnguni from Benguela Global Fund Managers with Microsoft. Moving forward, Stockwatch will be recorded 12:30 on Fridays. Be sure to send your questions early via email to stockwatch@bdtv.co.za. SMS 41392 on X Business Day TV using hashtag Stockwatch. Up next, the close. Stay watching.
Thank you.